Hello, everybody. We are here, episode 50-something, Palantir Weekly. You know I want to ring the bell, but it's only fun when Chris gets annoyed. So
I would agree with that.
We can pretend to be annoyed.
I feel like we should still do it, but I was not going to do it. And then we were like, oh, Chris, we didn't do it last week, but then we're going to do it the next week. But we still got to ring the bell because it's Palantir Weekly time.
Yeah.
All right. A lot of stuff happening this week with Palantir. We've got Gabe with me this week. We've got Dom with me this week. And we've got Arnie with me this week. Steve was supposed to be here. Honestly, he's probably sleeping, but I sent him the link. I'm going to text him right now and be like, get your ass on.
Tell him I'm on because he always gives me crap that we're never on at the same time.
I'm going to be like, we're on and Dom is here. But there's going to be a ton of stuff that happened this week. Lots of different things to recap. Obviously, earnings had a big spike. Then the entire market pseudo crashed this week, at least relative to last week. We had a new Forrester report come out showing just some amazing statistics. Carp talked in a bunch of places, a bunch of different things. So first thing I want to start off with is some earnings recap from all three of your perspectives, because we didn't get you guys on the last pod. So I want to know what you guys think about earnings, and then we'll get into some other stuff. So let's start with Arnie. What were your thoughts about earnings? Then we'll go to Gabe and then Dom. Go ahead.
I would say is a transitional quarter, at the same time a groundbreaking quarter. A transitional quarter because in reality, in terms of operations, nothing really changed from what we were already seeing before. We know that the government was suffering from the previous delays, and the commercial side was suffering mainly due to Forex and for the CEO not propensity to invest in huge digital transformation projects right now. Like, they need to do it, but at the same time, they're scared of being involved into big projects. So my expectations were, well, the results will be probably just okay, nothing spectacular in sight. Yet I shared that there were many possible catalysts more oriented to the stock and mainly driven by the management, meaning that if they wanted to push the AI narrative, they could have done it. And we are seeing that they're gradually getting there, not because they want to pump the stock, but for them, this is a real opportunity to actually show the people, hey, we are not a black box. We are an AI company, and actually we are already ranked as one of the best AI company in the world. And at the same time, it was really peculiar how they surprised everyone with the GAAP earnings that I would say are not fully real GAAP earnings, because they are, well, GAAP profit is GAAP profit on paper, but in terms of operation, the reality is that the operations are still negative, minus 3% operating income over the revenues. Minus 3% is negative, yet I would say if they just save 3% of the cost on revenues, it means you are at break-even. So whenever the management now wants to show real GAAP profitability, they can do it. And this, it was the big signal that the management had the option to use to signal something to a market, and they decided to do it there at the moment of peak, how can I say, at the moment where nobody wants to touch something like Palantir with a high stock-based compensation, dilution, whatever. Basically, they shocked, and they give the strong signal, because many SaaS companies will struggle to be profitable even with the cost cutting in place. And it was kind of remarkable how they basically tricked the algos, I would speculate, because, okay, you are GAAP profitable on paper, but they literally insisted, like, GAAP profitability. Hey, listen, hey, algos, listen well, GAAP profitability. We are profitable.
It's like, hey, and they were profitable, and the algos were like, all right, to the moon, $10, we got it.
So
yeah, no,
overall,
it's a great point.
Overall, quarter, okay, just the progression. The signal here is strong, and doesn't really change the thesis. Actually, I would say reinforces the thesis, because Karp underlined a very important point, that a company like Palantir is used by thousands of people over very critical use cases. So you need to ensure that a company like this is completely healthy from a financial standpoint. And this can ensure partners actually to trust Palantir more.
Okay, Gabe, your thoughts on earnings?
Okay, so I'm going to preface with I'm a very big bull. Okay, and Palantir, for me, although I have made money trading it, I have never lost money trading Palantir. I am here tonight because I am an investor in Palantir, right? But I'm not going to give you a pumpish or half-fast answer. My belief is that one day, and I don't know when that day will be, Palantir will go parabolic. There will be a day that it will go parabolic, and it'll go parabolic like Tesla did, and it will hold on to these gains, and there'll be no looking back, right? This earnings was not that earnings. If you know me, you know that, Amit, I taught you how to sell a covered call. So Palantir is the company that I tell people not to sell covered calls on, because for the most part, eventually you are going to screw yourself, because you are going to limit your upside, because that's what a covered call does. If you write a covered call at a certain strike and then it goes parabolic, you're screwed. All that upside you just lost, because you have to sell it at that strike that you sold the covered call on. But with that said, I knew that Palantir's time is not yet. And I know I thought I knew it before the earnings, and I definitely knew it after the earnings, right? And so much so that people said, Gabe, what should I do? And I said, yeah, I mean, you should sell some covered calls, because it's extremely high, as you would say, Amit, on the RSIs.
The RSIs, baby.
The
That's what it is.
RSIs.
Sorry, Gabe, this was before the earnings or after the earnings?
Like when it spiked to 10, basically.
It's I can't recall exactly, but the she got me saying it. RSI was above 70. It was above 70.
Yeah, when it went to 10, it was over 70.
Yeah, it was above 70, and I said, look, if you're gonna do it, you do it now, because and then, but they sold covered call at, I think it was either 13 or 15. I can't remember. I mean, it was way up there, and it was only like a month or two out, so very low probability of happening. It was basically free money. But back to Palantir, as far as the earnings go, I wasn't super impressed. But what I will say is that they are achieving everything that I need them to achieve to maintain my thesis, right? They are getting better. They are slowly but surely fundamentally getting better. Although they're de-risked a whole bunch, and they're down even below their IPO. Their fundamentals are slowly but surely getting better. The gap profitability thing, I will be impressed if they're gap profitable next earnings as well, which I don't think is going to happen, because I think it was a one-time thing, and the reason I don't like that is because it's going to nick them in the butt later. You know what I mean? It's everyone who doesn't watch these Palantir weeklies, who only heard that kind of a thing. Next time we're not going to be gap profitable, and they're going to be all down in the dumps, right? People who watch Palantir Weekly and who watch you, Amit, daily, or who do due diligence, other than just people who heard about Palantir through the grapevine, they don't know about these nuance things, like this thing that I believe, this one-time gap profitability. So all in all, without monologuing, I love Palantir. And like I was talking before you went live, is I already have a plan for all of my Roth IRA contributions for 2023. 100% of it is Palantir. Now, you know me, Amit, so they're all going to be via writing puts, but all of it all $6,000 are going to be in Palantir, because for me, Palantir is a
7,000
very
this year.
long-term thing. Say again, Dom.
It's 7,000 this year. They upped the total. What you
They
can
upped
do.
it?
Yeah.
Well, I only
Wow.
put 6, so I didn't know that. I didn't know that it was up. Okay, thanks. I'll look into it.
2023 is 7.
Well,
So-
Dom, I had to. I had to do a backdoor Roth, meaning I had to put it into a traditional and
Okay,
then convert it and then pay taxes on
yeah,
that
yeah, I
6,000.
got you.
But yeah, I'm only 43, so I got many years of compounded growth to go. So yeah, for me, guys, I really believe Palantir is going to be my single best investment of my lifetime. I truly believe that, and until my thesis changes, I will tout that every day. But as far as the earnings, I wasn't blown out of the water, and I actually don't like that this gap profitability thing happened, because now it's just going to be let down next time. And I also don't like that it ran up as it did, because the macro isn't very good, and I'm not going to talk about it unless you ask, but I believe that Palantir is still going to follow the macro, unfortunately. But the good news is that we're going to have really great actual investment-minded buying opportunities, and that's what I think.
All right, Dom, your thoughts on earnings? We haven't heard from you in about 2 weeks from it, so what do you think?
Yeah. I didn't even write an article on it. I wrote an article on FoundryCon recently, but was definitely I think I was the most pleased about was the earnings call itself, and how Carp is really evolving into playing the Wall Street game, is really coming more business acumen focused. Not that he didn't have it before, but maybe that he just really didn't want to talk about things in that light. He even says it on stage, I'd rather talk about philosophical things and theories and everything else, but tell you what, I'll give you the real business, really reals. And what I will say is, Amit, mad props to you. The last 3 videos, I watched them today, and I like the outdoor
like the outside. Yo, the outside.
outside.
Bro, the first video I did on that a week ago, people loved outside, and I was like, all right.
Yeah, I liked it, and but you really hit on some very valuable points and had some good clips in some of the different conferences of that. And I've said this many weeks ago in times during this show, is they're doing things on their schedule. To Gabe's point, I'll be surprised if they go profitable again in Q1. If it does, I think it'll spike, but I think exactly to what Gabe said is there'll be good opportunities throughout the year where it's just following the macro. It's very volatile. It's still kind of a trading environment. But what I was looking for in my thesis that stayed consistent was customer growth. That's what I'm focused on, is customer account growth. And also you got to ask yourself, what's your time horizon, right? So for mine, you got to ask yourself, can it be a steady grower? Can this be a steady growing company growing 15% year over year for the next 20 years? I think it can. I think the business model was designed that way. The business model itself with acquire, expand, and scale is not an instant gratification business model. It's not grabbing one big contract and then that's it. It's more of a customer for life approach, which is the best approach in software as a service, because they are focused on true value realized. I love the title that you gave for this week. I'm sure we'll talk about the Forrester report. But he articulated that very well in the earnings call. He articulated understanding about sorry, someone called me on that. Yeah, it's 6,500 for the Roth, 7,500 for people over 50. That's a good call out. But you look at 55% customer count year over year, 9% quarter over quarter, 79% year over year on U.S. commercial, and 67% year over year on the commercial revenue, I believe, for the year. So overall, I think they're sandbagging on their guidance. I think that the best part is, even if they just hit guidance, which won't be impressive, it'll be like 16% year over year growth. they're not going to be super penalized, right? The stock has already been obliterated. Unless we have some crazy catalyst of a recession that affects growth even more, which I really just don't see how much farther growth can go down. I mean, when you see stocks hitting 75% from their all-time highs, because it has no debt, because it has 2.6 billion plus 900 million convertibles, they have confidence in the institutional investors who are holding. They're not going to sell off. And so you'll have it stay around that same level price. The good thing is if they keep adding customers and growing and expanding in their business model, this will be a different story when you look at 2024, 2025. You will start seeing the contribution margins much higher with the current customers. And I'll finish it here. I loved your take, Amit, on the government being the moat and the cash cow that allows them to take that money and reinvest in how they innovate in the commercial space. Because I do think we have a lot of government revenue we have not seen unlocked yet. In fact, I think we might still be going into, forget the term, with continued resolution, where the funds aren't even being spent yet with the government. And I love how you talked about the Ukraine piece. Very touchy subject on all of our spending there, but I think Palantir is going to see some of that money to what you had.
Because if we gave Ukraine 112 billion and Palantir gets,
I have to feel like we're going to get some of that.
Yeah, and another billion or two over the next couple of years.
Yeah, it wasn't a rock star earnings. I mean, I don't know, the gap. You could see what was interesting. At least we can see is the appetite for the idea of just saying they were gap profitable. You saw a 31% spike in the share price in a short amount of time. What is it going to look like, to Gabe's point, when they're generating free cash flow of $1 billion and are fully profitable and still have no debt and are putting up 20% revenue year-over-year growth? If they can do it consistently, like a Microsoft or someone like that, that's sustainable, opposed to these growing 80% year over year, and all of a sudden now I'm down 15% year over year. I mean, this business was meant to be built for resiliency, and for a long-time holder, hey, I'll take that all day long.
You know what, Dom, on that point, there's just one thing. So as far as a speculative asset goes, as a young company who is trying to find its way and become a darling, right? I mean, Palantir, if you take away the fluff and the bias and the delusional bulls, which I really try not to be when it comes to Palantir, I really try to be pragmatic. Amit said it the other day, and then you just touched on it. We are in a macro environment where it's very expensive to borrow money. They're never going to have to do that. We are in an environment, even in a great environment, when there is a speculative stock who has, and the price to book isn't even that bad. It's only 6, right? So it's a price to book of around 6, but the price to book only really matters when you are kind of worried that they might go out of business. And that's why I always say, like, if you can get a company under a price to book of 1, the risk of you losing money on that trade or investment is very, very low, right? But when we talked about Palantir, even though the price to book isn't around 1, they will never, I don't want to say never, it is unlikely that they do not have enough money quarter over quarter, year over year, to not only grow but continue business, right? Mm-hmm. So, I mean, this is, as far as speculative assets go, and to again Amit's point, because he always loves to talk about the probability of doubling. There aren't many great choices in the market, but Palantir is one of them. Palantir is one of them where if you are patient, that is the key. If you are patient and you understand risk analysis, you're not going to be burned on this at this price point, right? At $25, yeah, I mean, that sucked. I get that, but we're not there anymore. We're where we are at now, and I just want to really convey the importance of the fundamentals. Although as a whole, the fundamentals aren't like, oh my God, it's amazing. I mean, they kind of are amazing. They're not amazing for, oh my God, this is a diamond in the rough amazing. But as far as a company that is just, knocking it out of the park all the time and growing, they're going to be something. And that's what I wanted to say.
Well, I can tell you, working in this space and selling software as a service for 20 years now, they are doing it the right way in focusing on the customer, not the transaction and getting the first big deal, but focusing on proving out quantifiable value. How you keep a customer long-term is being able to reduce time to value in what they give you. And this one's good segue to the Forrester report. Reduce time to value. And if you can quantify that, prove that, deliver that to a CEO and say, we saved X amount of dollars by this investment, that renewal and that expansion is going to be so much easier because the technology has proven worth it. And if you look at the customer testimonials, the references, and the type of customers that they've acquired, you do not see many customers or companies doing that. And then you put on top of what Amit put out this week on the government piece, the only other people that are IL6 certified is AWS and Azure or Microsoft. So that's a class of its own, and they will continue to get a piece of that pie in the government spend.
Tom, I have a related question. Maybe intrinsically you already partly answered to that. Before you suggested that, in your opinion, Palantir is basically sandbagging what they expect really. And my question related to this is, they are growing obviously less than what we expected, than what they expected. This could be for two reasons. Or they are somehow struggling, or they are dominating the game and saying, you know what, for us, maximizing the revenues right now is not that is important as it is maximizing the client adoption, and revenues would come later. My question for you and for everyone is, how can you actually discriminate from a case of weakness where it is the company that is not growing as fast because basically can't, or a position of strength where the company is just delaying the future revenues rather than maximizing it now? How do you understand if you are in one situation or in the other?
Yeah, I think you have to look at the business model and how it's designed and what they're trying to do, right? They're trying to, and they've been very transparent. So for anyone who says this is a black box company, they're just not doing their homework. They're trying to capture industries at scale and increase networking effects to then be the industry standard operating system for a lot of these other commercial places. And so in doing that, what do you have to do? You have to be able to quantify value on projects and win parts of the customer, right? So if you get a small department to see value realized, hey, we said, and you can go through the Forrester report, I have it pulled up here, and the things that they've talked about on the efficiency they've saved on employees.
I'll share the screen right there. And
on the savings that they've had for supply chain. There's actually specific industries they called out: utilities, science and engineering, consumer goods, and manufacturing. That is who they pulled together some different customers, and then they make a conglomerate customer average of what they would expect based on all the research and interviews. So I want to see what would be contradicting or concerning, Arnie, would be if their net revenue expansion wasn't over 100%. And if the customer count wasn't growing, that would be concerning. And then also too, their top 20 accounts are still growing at a rapid rate from like 40 some odd million to now 49 million annually. That shows the stickiness, the effectiveness, the value realized by their first customers. So if they can do that with the government, they can surely do that with commercial accounts. And I think we're just starting to see that. I mean, the real knock here, and they admit it, and Karp nailed it on the earnings call, was their sales team. And I've talked to 3 different executives over there for sales executives. It's a nascent business. They are new to sales, and it was just carp, right? Like they are figuring out, imagine a company that has this brilliant product and technology that is just does what it's supposed to do, but they never really thought about going public, and they never really had a sales force and a structure to incentivize salespeople. How do you pay them? How do you?
Dom, let me ask you a question real quick, since you're in software sales. Like if you were building the next Facebook, right, social network, you would need some type of marketing campaign that is getting the attention of the consumer. With B2B, and there's a lot of ways to do that, right? Virality, ads, there's like a ton of like kind of logical ways on how to get people to potentially download a new app. But for you, but for software, it's so different.
Mhm.
Is there, can you give us like for
Yeah,
let
me give you some different things that they're doing. I'm so happy.
two or three ways that you would get
Yeah.
a CTO or whatever's attention to actually get on the phone and listen to you about Foundry.
Well, yeah. So some of the biggest things is when we talk about enterprise sales, customer references speak volumes, and you can even see in the Forrester report they had one of the oil gas guys talk to one of his peers. All the CIOs, CTOs, and CISOs and CEOs, they're all a tight knit community, right? The CEO of BP knows the Chevron guy, who knows the Exxon guy, and if you see something where they're having better earnings and they're better performance, they're going to talk, right? And that's to keep up. They're going to then talk about how do we make this whole industry better, right? And a good example is the developer market suite that they have that they came out with, which really has always been there, but now they productized it, where customers who use Foundry can basically create their own SaaS application on top of it and sell it. It's essentially Skywise, right? They named on their website Skywise, Wejo's done it, and 2 other companies have done it. And so that's how you start getting industry standards developed. What I like, though, is that they're also taking the traditional enterprise sales approach and partnering with the big hyperscalers. So just recently, I think it was like a month or 2 ago, they announced that they're on the Azure Marketplace. And that was a big one because Microsoft wasn't necessarily a fan of Palantir, right? And so now they've put it on there. It's on the AWS Marketplace. It's on the GCP Marketplace. And why is that important? A lot of enterprise software is being consumed through marketplaces now because they're already using the cloud computing. They have to. Everyone's moving to the cloud or a hybrid model. And so when they sign these big contracts with AWS, Google, or Microsoft, the stipulations in the contract are, hey, if you buy X amount of millions of dollars of credits and you use them sooner than later, we'll give you a better price and discount on your next contract. So what you see customers trying to do is trying to put out all their software purchasing. If it's available to buy on AWS's marketplace or Azure, I'm going to do that because now I'm burning down my credits. I'm saving money and I can renegotiate my contract the next time. So that way I'm saving money on my overall cloud spend. And so by them doing that and having Foundry easily accessible, and if you look on their Palantir blog, they talk all about this. Customers can just go to Azure. Yeah, it says $1 million. Yes, it's $1 million, but obviously we're going to have a C-level conversation before someone pulls a trigger on that. They're not going to swipe a credit card, but it's that quick to deploy and then burn against your contract. So the fact that they're doing that, the fact that they're doing CES, which we talked about, we wanted to see them. We're starting to see them in partnering with things like NVIDIA at conferences. That's what I wanted to see was like, okay, start figuring out how others do the traditional enterprise selling motion, and then let your product do the talking for it. And they're doing that.
So Dom, let me ask you this question. These partnerships with the hyperscalers, is Palantir being good at achieving it, or it is just the regular standard you need to actually have in order to be actually appreciated as a good software company?
Trying to follow the question. Are you saying that to be a good software company, you have to be on the marketplaces?
Yes, meaning that is Palantir somehow unique, or it is if you are a software company, you need
certifications you have to go through and competencies you have to earn to get on the hyperscaler marketplace. You also have to be enough in demand to warrant that and have that partnership where they're, AWS is getting a tiny little fee and cover every time someone buys a product on the marketplace. Same with, Azure, et cetera. So that speaks volumes there that they're doing that. But then yet on the same piece, they're also working with Cloudflare and optimizing public cloud hyperscaler cost reduction. So when you start playing with everybody being Switzerland because you're delivering business outcomes, it may not happen overnight, but it's value realized consistently. And then if you can make everybody win, you become a very important part of, you know, where people are building their applications off of things, where they're hosting their stuff. And they even said, like, I was wondering to see if they were going to say, oh, we're going to replace SAP and ERP systems, because we know HyperAuto is a product they have that can do that. But instead, they're like, we can make it better. We can make time to value realized faster in your deployments. So they're saying, hey, you don't have to rip out all your applications. You don't have to rip out your ERP system, but we can make you make better decisions off of that, laying it on top of the ontology. And that's what's so special.
Connecting to the Forrester report, we can integrate with everything. You just have 3 years before you get replaced. I say that because
oh
because,
yeah.
In the report, they say that basically
That's
after
true.
3 years, the
Legacy
detachment of legacy solutions make the company save more than $25 million.
Well, and that's why I don't think you'll see. I don't think that there's any like close knit partnerships with SAP or any other ERPs, because that's like direct competition. But you know, you see them working with like IBM Cloud Paks or Data Robot. You know, those are things where they can win together because they can bring each other customers. But legacy apps.
Why do you think that Forrester report came out when it did? Like, do you think there's any reason behind it, or just random?
Forrester controls that, right? So we do Forrester at VMware. We work with Gartner and all those. You know, so they control when they release.
And these reports, do they also influence sales, you think? Like, do they?
Oh yeah. Like, I would say Gartner's the number one in enterprise software that has influence, and then Forrester's right behind it. I think those are the two that people pay attention to. The TEI report for Forrester's one that, you know, everybody pays to play and gets a report on their stuff. What I will call out, though, because I'm not going to be biased here, is they picked large companies. If you look at the report, they picked, I have it pulled up here. It was like 50,000 employees, 140,000. I mean, it was just massive. 50 billion annual revenue here. Yeah, 140, 120, 20. So no one under 25,000 employees was surveyed. So we've talked a lot on the show about how we want to see them scale down. I want to first see them capture some industries and some standards. And I think the closest thing that they're becoming to do that, besides the airlines, is the energy sector, oil and gas and electric. I mean, you saw in FoundryCon, they had competing electric companies in California, both using Palantir.
Well, let me show you this. That is, sorry. Okay, this one.
Yeah, after this one, we can also talk about their partnership with a startup in Germany as well.
This is the ranking by revenues of the biggest companies in the world, and $100 billion revenues, which is the archetype of the company they showed by combining the average of these 4 cases, leads us to think that the archetype is one of the 100 biggest companies in the world in terms of revenues. And here we have like Stellantis, there was Cardinal Health.
They work with Dell.
So
Palantir works with Dell, that's official?
Yeah.
You're absolutely right. The company they depicted in this report, so you put 80 million as an investment, you get a 3x that. That is for this kind of very big company. It's not for the average company out there.
Right.
Yeah. But what I was really happy was in the FoundryCon, you saw them talking about the tooling company, the mold and tooling company. I forget their
Integrity.
But and you could tell the CEO was nervous because, I mean, he was in front of some big boys there presenting. But it was their most important decision and highest cost of purchasing, other than the actual manufacturing equipment and leases. But they saw value in the POCs, the proof of concepts they already ran, and so they pulled the trigger on $1 million purchase. So that's really encouraging. If they can start showing that, and that takes a lot of building your sales force out, because I really find it hard to believe that Carp will continue to have the scale to go visit, customers of that size. But if they can start winning contracts like that in that smaller space, medium-sized business companies, they do grow to become large enterprises. There are those,
So Dom, let's say I go to work on Monday at Palantir and I'm a salesperson. I am incentivized to sell software and I will make a commission on that. So like, I really want to sell software. Am I pounding the phone? Am I getting on LinkedIn? Like, what am I doing on Monday to get some commissions?
Yeah, there's a lot of tools that they use there that a lot of traditional sellers use. I won't name them, but they are definitely calling. But you're really trying to make connections via LinkedIn. You're trying to networking. You're using your customer references that you have. You're internally working with the engineers and forward deployment engineers that you work with at the company who can set you up. You're looking in your sales force for lost deals. Why did we lose? And going back to try to win that business. And it's really, and then you can take something like this, Forrester report. I mean, and if you look at it, I mean, like every Palantir employee posted that report, right? Like they do a fabulous job of posting on LinkedIn of all the things that they have going on. I think that's one of the ways you're doing that. But it's also a long sales motion. It's not an overnight sales motion. So you got to play the value game, and you're just trying to get someone to take a meeting. And once you get that meeting and get that C-level stuff, if you can then work down chain and get a demo and a proof of concept, whether it's Foundry for builders or just in general, that's when the light bulb comes on. And you can see some of the commentary in the Forrester report. They were like, wow, we were able to make decisions we could never make with any of our tools before. Like real-time decisions. And then with the digital twins, we can actually test out, what if we did it this way, right? We can actually start making different decisions without feeling the pain, making the wrong decision. And that's why that's so effective. And that's why you're going to keep seeing digital twin technology. NVIDIA has their Omniverse. They've provided savings and being able to make decisions that aren't actually put into motion yet.
Dom, do you know other companies that have a very similar study to this? Because I thought about my search for like Salesforce, ServiceNow. I'd never encountered a report like this saying we put 80 million, the ROI is 300%. Do you have you ever experienced a report like this? And what was the results grossly?
Yeah, so, like our product, Carbon Black, we had a 384% return on investment on our product, but it's not a product of size of this magnitude for the whole business for multiple functions, right? I think what's so impressive, because you'll see this from CrowdStrike, you'll see this from a lot of other software companies on pieces that they do, right? Like things that they deliver on a function. What's really impressive on the TEI report and just in general for anyone who follows Palantir is it's the ontology. It is the actual social nature of the product that gets executives and sellers and managers to actually talk to the technical developers, to talk to the engineers, because they have to, right? Like, okay, now how can we save money doing this? You showed us you did this. What can you do with the supply chain? What can you do with our back order problems? Like it allows you, and I'm doing way too much talking here, but it allows you to sit in a boardroom with executives from all parts of the business and say, here's our inefficiencies. Where can we double down and make changes and see actual return quickly? What needs to happen? And before you couldn't see real-time data and cause and effect. But when you have digital twins and have that visibility, even out in the field, and going back to Amit's awesome video, they did this with the military. They did this in the hardest climates and everything else where you didn't have high-speed internet connections and everything else. Now you take that to the commercial space and it's like, I like Snowflake, but good luck you're not gonna be able to replicate some of the stuff we do.
I've never liked Snowflake. Never. Not
Neither.
even. Nope. Never. Not once. Fundamentally,
Gabe,
like
can you speak on Snowflake's valuation a little bit?
Sure. Let me pull it up. It's
While you're
just
doing
snow,
that,
right?
while you're getting,
Yeah.
it's just snow.
I guess I have a question for all three of you on that. And I'm not Chris, by the way, saying that Snowflake's better than Palantir. But do you believe that there's multiple winners in the data analytics, data warehouse space that can still beat the market?
It depends how you define winner. If you define winner by beating the market,
beating the S&P 5, like let's say 10 years from now, do you think Snowflake beats the S&P 500?
I don't think so, man. Because I don't think so. Because the product's a commodity. I don't think so.
Compounded over 10 years.
Maybe over 3-4 years.
It's a commodity. The 189% retention, net revenue retention.
But how much are they spending on? They're spending 75% of rev on sales and marketing. Like at some level, either I believe Carp that they actually have something that's different and that will last, and everybody else is like not shit, but it's just like it's not the thing, or I don't, right? And it's like
I think there's a lot of environments where those two solutions can be in the same place. We've heard CodeStrap talk about that too.
Yes, but in terms of Snowflake's already it's trading 3 times TTM.
Yeah, I'm not saying the valuation's great here for a short term.
So that's what I mean in terms of beating the S&P. Just the valuation alone right now.
I'm saying if I bought shares today at 150 or whatever it's at, or bought SPY.
But that's what I think from a qualitative perspective. If we don't think it is the thing, that's why we're all betting on Palantir as the thing. Then why in 10 years should it be the S&P, even if it's still around? Why should it beat the S&P? Right?
Well, why does ServiceNow beat the S&P? Why does Adobe beat the S&P? I guess what I'm saying, and this is what's so beautiful about investing, is it's all personal decisions. Some people like to ride or die with 3 holdings. For me, I like to have 25 to 30 holdings. Obviously, my highest convictions like Palantir and NVIDIA are going to be much higher in weight, but I like to diversify some of my risk. So like other companies that I could see like, they're going to win a part of that space. They may not be the biggest winner. So I just throwing it out there.
So here's how it's going to happen. So when you are in companies, right? The S&P is a basket of 500 companies. Right? It's not really 500, but it's close to it. 500 companies. Okay. And then against a person who has, to Dom's point, 30, right? It's kind of like, look at the NASDAQ 100 versus the S&P 500. The NASDAQ 100 is around 100 companies, plus it's tech, which is very volatile. Just because of how it is, the swings are going to be higher. However, over time, as long as those companies don't fail, they're going to beat the S&P 500. So to answer your question, will it beat the S&P 500? My answer is, if it doesn't fail, the answer is yes. If the company doesn't fail over 10 years and you have the stomach to hold it during the not so great years, that couple of years that it goes parabolic or what have you, will give you a higher return.
I would agree with that synopsis completely.
Yeah.
And everyone's different, like everyone has, that's the, I don't get mad about anyone having all in Palantir or all in Tesla, it's all our own individual money.
But Snowflake is garbage. Snowflake is garbage. I don't know them intrinsically as a company. I refuse to do a deep dive on them because their numbers are absolutely disgusting. I won't even trade it. I don't need to. But from a stock perspective, like valuation, every good investor needs to learn how to DCF, right? And if you can't do it on price to free cash flow because they're speculative and they have no free cash flow, then you do it on earnings. If you can't do it on earnings, then you look at multiple things like price to book, etc. But you need to figure out how to evaluate a company. All right, Palantir for me, although it doesn't have free cash flow, although it doesn't have a PE, the price to book is not bad. So it has a lower price to book than Snowflake. It has a 7 price to book, and Snowflake has like a 9. But they have, like we said, all this money. So they have, as far as I'm concerned, a 0% chance of not being able to continue the business. And as far as I know, they are always executing and doing better and better and better. They're building upon sales, right? What is your definition of a great company? Well, I'll tell you my quick definition of a great company. My definition of a great company, I'm talking about the big boys like Apple, et cetera, are they're always increasing revenue, always increasing always increasing profits year over year. It doesn't have to be quarter over quarter, but you want to see that year over year growth, right? Maybe one can be down, but as long as 90%, 10 years, 90% are up, that makes it a great company. Plus their price. So, but now what if you find a great company who meets that metric? It's always going up, but then you look at the fundamentals and it has a PE of 100. Like Dom, we were talking about in
can I
yeah,
interject for a sec? I was
Yes,
just gonna say, so to that point, when we look at Amazon historically and the valuation was astronomical way back when, would you say that would have been a bad investment? And we look at where it's at now.
In what stock? In what
Amazon.
Stock? In Amazon, yeah. So what year
are they not these qualities of companies that, because people get bent out of shape about not being profitable?
But what year? But what year are you talking about? And also, you know, if you understand Amazon, which very few people actually do, and how they cook their books, so to speak, right? They don't understand the valuation. So the stock market is very, very hard for a normal person to look at a website and say, yes, I should buy this, or no, I shouldn't. Like it takes study. So Amazon is one of those outliers, Dom, which I'm sure you know because you asked me this question, where you have to understand how taxes work. You have to understand, although the earnings report says this, it's not really correct because they're getting that money and they're putting it right back in the company. So you have to learn how to read the numbers in a way.
Let me ask the question differently.
Yeah.
Do you only invest in companies that are profitable or have free cash flow?
Well, Dom, that's a great question. I'm going to answer it like this. I have a total of 3 stocks that I invest in. I am a trader. All right. I am a trader. I invest in Palantir. I have an investment in a very small company that a lot of people probably haven't heard of called Netlist, and it is a complete gamble. I made a lot of money in 2021 on Netlist, and I kept some shares, and then when it dipped really low, I bought some more, but I'm done with that, right? So they're basically suing Google, and if and when they ever win, it's going to, like, I'm not even making this up. If they win, they're going to like 50x almost overnight. It's absolutely crazy, but it's a pink sheet. If you don't know about it, don't do it. And then I have an investment, pretty large investment in a company called ADMA. I hate the management, Dom. They're also a very speculative company, but they have certain things about them. I am like a Mint in that sense. My investments, even though I'm not as young as a Mint, my investments are extremely speculative. So I have 3. They're all speculative. My investments are all speculative, but Palantir is the only one in my mind that I would bet my life that eventually I am going to make a lot of money. I'm not saying it's going to happen next month, next year, or even this decade, but before I retire, I know that my Palantir shares will pay me off. Well, in my mind, I know. So to answer your question, Dom, I'm mostly a trader. That's what I do.
That's fair. No, everyone, investing or trading is a personal decision. So no one should get mad at anyone else for their different philosophies. I think it's great to talk it out and to kind of see, what everyone's perspective is. Arnie, you've been quiet.
Well,
so
yes, actually, I was going to jump in before we diverge too much. When it comes to investing, everything is related to the price you pay versus what you get. And basically, if you pay a price that already incorporates all the good expectations that could come in the future, basically, you're not going to make a lot of money. Therefore, as an investor, you want to seek those opportunities, those asymmetries where you pay a price that doesn't incorporate such good expectations. And as the reality unfolds, those expectations that were not implied come out as good results, surprising, creating appreciation in the price. So my question directed to you, for everyone, but since you were talking about Snowflake, what do you know that, why do you think Snowflake price currently doesn't reflect already all the positive outcomes that could arrive? And why do you see it differently from Palantir, or you see it in the same way?
I don't see it in the same way because there is a lot more institutional money and backing on Snowflake. There's a lot more adoption in the commercial space and in what they do, right? I like, Palantir is contradictory to the institutional investing because the institutions don't understand it. They don't understand the technology. They don't understand the power of it. We're just starting to see, FoundryCon kind of opening people's eyes on that. Those who don't work in software or really understand that sales motion and technology can't appreciate what they're doing and the difficulties of what they're doing. So I'm not trying to put a Palantir versus Snowflake discussion. Everyone who's ever watched the show knows I'm going to say Palantir every time.
No,
I'm
but
saying
this
for,
is the point.
I'm saying for me personally, in my portfolio, and I don't have a huge stake at all. It's not even 1%. I'm just saying it's a company that I believe, can beat the S&P 500. And if I were to say top 100 tech companies in the world, it's on there, right? And I like the leadership. I like Frank Slootman. I like what I talk to customers and hear what they say about it and how integral it is at the commercial space and the value it delivers. And you can have two ways to win, as I think Amit was saying earlier. You can either spend a whole bunch on sales and marketing and salespeople, and you can get your technology there to that point where it keeps scaling and you get that net revenue expansion. They obviously have to have some good tech for the fact that people keep buying more and more, and their RPO keeps growing. What's attracted me so much to Palantir is that their technology is just so unique. It's so different that it's going to have that parabolic eventually, as long as internal management, stays on point with moving the company forward from a sales perspective. But I think that, before Snowflake, there's a need with the hyperscalers. There's a need for data lakes. There's a need for building application and analytics. And I feel like with that leadership team, if Slootman leaves, my thesis is possibly broken.
Dom, I have no doubts about the business being very good, the management being very good. My question is more related to the valuation, as I'm aligned with Gabe, meaning that the business per se is actually very good. In terms of valuation, I really struggle to see what kind of reality could emerge that is not already implied by the price. Because with Palantir, we can clearly see, I would say, clearly see, and then not all the markets clearly see that there's a big asymmetry between what we see from having studied the company very deeply and how the market perceives Palantir, which
that's why
many
20% of my portfolio is in Palantir and less than 1% in Snowflake. So
okay. So
I'm not like Chris saying
sense.
you buy Snowflake instead. I'm a well-diverse investor. So, and not even, I guess some people could say I'm not diverse because 50% of my holdings is 2 stocks. So technically, I guess I'm not a diverse investor, even though I have a lot of different holdings and companies I follow. But my biggest convictions, NVIDIA, Palantir, Tesla, Mercado Libre. I mean, those 4 are my 4 horsemen.
Well, yes,
Arnie, is there any specific stat on Snowflake that you think makes it overvalued?
I get what he's saying. The valuation, the valuation is set up for perfection.
That's the point. If you even if you do a DCF, but basically you end up with exactly the same information you have just by looking at the current multiple. Okay, if you consider that a 20x multiple on sales is a quite rich valuation, that means that the company, in order to grow into the valuation, already needs to perform very, very well.
Yeah,
and this means
constantly
that as soon as maybe the growth starts decelerating more than expected, then you start having a problem, which is not a business problem, but it is a valuation problem. It's very similar, in my opinion, to the situation where Tesla was when it was very high. where basically the price already incorporated the idea that Tesla would have grown like 50-60% per year. And you just have a situation where the business actually grows much less than the valuation starts getting in trouble. So my perception, then I could be absolutely wrong because I'm not deep into the Snowflake numbers, is that the current price already incorporates too many good things, meaning that if Snowflake keeps doing those good things, the valuation basically already reflects that. But you have bigger downside potential if
I would agree with that. Yeah,
that
there's
doesn't
way
happen.
more. Yeah, totally.
With Palantir, we start already from low expectations.
Yeah.
So I'm not pushing on whatever, just what I see. Like with Palantir, right now, we are basically buying bad numbers, and the price already incorporates not such a rosy future. Well, good growth, but nothing spectacular, because analysts tend to be linear thinkers. So as when they see good recent past, they start projecting good future for the next years. When they see a slowdown, they tend to imply that slowdown will be permanent.
Arnie,
and I think
I have to correct.
Palantir,
I have to correct you, Arnie. I have to correct you because you said about analysts. So analysts are not linear. You said they tend to be, which means more often than not they are, right? And there are sell side analysts and there are buy side analysts, and believe it or not, analysts a lot of the time, unfortunately, and this is the truth, everyone, to some degree are shills, right? They have an agenda. And so they're linear, I think, is an understatement, Arnie. That's what I'm trying to convey to you. If you want to find an analyst who is not a shill, at least has a high chance of not being a shill, if they have to have been in the business for at least 5 years, and then look at their history. Okay, look at their history. That'll tell you, because there's so many people who are analysts. So you see them on, like Amit loves to watch CNBC and all of these. They're all shills in my opinion, and they come on and they will say something, but man, they have an agenda. Perfect case in point. I'm not going to talk too much, but there was this guy named Lieberman today who is such a mother effing shill who was like pissed off that, and he was like, this is ludicrous that the market is acting like this after this PC inflation. Nothing has changed. Like, he was saying these kinds of things. And at the very same time was another analyst, well, actually it's a strategist, who was like, yeah, he's saying those things. This happened in the video. He's saying those things because he was on the wrong side of the trade. And what happened is, at least in my opinion, is that this guy Lieberman, I think that is he Lieberman, or it starts with an L, I apologize, but I promise you, what he's trying to do is he was trying to sell the rip a little bit later. He was greedy, and he was wrong. And the PC inflation came out hotter than he thought, and the move downward came out before he thought, and now he's all perturbed about it. So long story short, Arnie, I only did this whole monologue, I apologize, was because you said that analysts are linear, and it's worse than that, man. And I want everyone to know that this game is not what you think it is, and just study more. That's all I'm really gonna say.
Yes, my comment was related mainly to sell-side analyst. I've been an analyst myself, more on the sell side, but not in a big bank. And the dynamics are clear that even if you are working not in a big bank, it is very hard to have a divergent view from what is already implied by the price. So basically, once analysts tend to have a view, you can very hardly diverge too much from that consensus. Then it happens, but that's not the rule. When it comes to investment banking, basically, we have to think that sell-side analysts are there not to be right, but to basically make money on the fees from stimulating trading activity for their clients, which are portfolio managers and family offices and the like. So they have the incentive just to extrapolate the recent past into the future, and because it is easy to justify.
How much does if you're a analyst for like Bank of America or Chase, how much do you get paid per year in salary? Is that like a high six-figure job to like analyze
Yes.
one stock? That's yes.
Well, jobs on Wall Street are very similar to tech in terms of pay nowadays. Actually, if I had to start again, I would probably go into the tech space rather than finance space because I would say the salaries are similar. The culture is very different.
Yeah,
I'm one of those
100%.
guys who I deeply love finance. I really dislike the financial environment as a culture because basically it goes completely against what I think makes you a good investor. As a good investor, basically you are an independent thinker going against the crowd. The financial industry actually 99% of the times just works as a crowd. So as long as you are in the financial industry, you can hardly be independent because you have to do things in a certain way. And you have all those kind of pressures that makes you not being independent. Like if you are a money manager, your job is to preserving the clients and not actually making the right choice at the right time. So for a portfolio manager, unless there are exceptions, but the average portfolio manager can't hardly invest into Palantir if that is controversial. Why? Because the clients would get pissed off. And you don't want the client to get pissed off. So you try to go into a Snowflake because it's more sellable. Wall Street loves Wall Street, loves Snowflake. So as a portfolio manager, you see less risk into a Snowflake just because of that, while Palantir being perceived as a black box consultancy, kill terrorists is like, no, I don't want to be into that stuff. Even if rationally, maybe the answer would be different. So I would say, I love the finance world. I don't like the culture because it goes really against what I think, I personally think makes you a good investor. And that's the reason why many investors actually, like many top investors, don't work on Wall Street or in London. They are actually close to that, but they are detached. And you even have the example of Buffett being in Omaha, which is in the middle of nowhere, rather than on Wall Street. And he makes better.
Hey, Amit, real quick. I saw a lot of people asking where was Accelera in my portfolio. So it's number 6. I saw some people talking about the $8.50 price. Very intriguing. I haven't got a chance to go through the earnings call, but yeah, that is definitely on my short list to do. So I have not forgot about Accelera, and that's another great company that is has Peter Thiel on the board.
Thank you, Juan, for the super chat. $10. Great live. This is the old EMH debate. Love it. Thank you for that.
What's EMH?
I don't even know what EMH is.
Efficient market hypothesis.
Efficient market
basically
hypothesis.
The thesis under which you can't really have an edge on the market because that is already implied by the price. While as an investor, basically, you are intrinsically betting on that hypothesis to be false because if the price already reflected all the information, basically that would be absolutely no edge for you as an investor to make more money than the average.
So Arnie, how old are you?
30.
Okay, you're 30, and you're not a financial analyst anymore, right?
No, I'm currently only investing since I was an analyst. I left.
Okay, so that's my question. How did you basically retire by 30?
Well, I don't consider myself retired. Actually, I'm striving to try to make my little business work while I'm investing. So
okay, gotcha. So you have something on the side. Gotcha.
So I was investing now. I've been investing for more than 8 years now. So I had some money. I saved that. I reinvested. I also manage my family money.
Gotcha.
That helps. Gotcha. And during the pandemic, basically, I was searching for a job for a hedge fund or similar, because after I detached from being an analyst, I said, you know what? I want to build an investment holding with another guy. The project in the end didn't work for personal reasons, not because the idea didn't work, but it was a dynamic in place where I was not happy with. So I said, okay, I'll go back as an analyst. the pandemic happened and everything froze. So I said, okay, I wanted to be an investor. I have the capital here. I have a pandemic. I have all the prices down. Let's invest.
Arnie, did
And
you do your
this was
CFA?
hold on. This was capital you saved from working as an analyst, right?
Also,
Okay.
so that
Gotcha.
plus the family money I was managing, which was
Gotcha.
basically all cash before the pandemic.
Arnie, did you do your CFA at all? 1, 2, or 3?
Well, I know. So sorry, you said CFA. I thought DCF. No, actually, I have a quite against position against the CFA.
No, you prefer the MBA, huh?
Actually, neither that.
Oh,
Well, I would say it depends on your goal. If your goal is having a career, an MBA is a great choice. If you plan like you work in a sector, you want to don't lose your status, but actually get better status, maybe making a career shift, an MBA is a great choice for you. It costs a lot, but it's actually a good way to get there. A CFA is actually great if you want to have a great career in the financial industry. I personally don't think having a CFA is a plus when it comes to develop yourself as an investor, because I strongly believe that becoming an investor is very personal. Also, Sachin says that you as an investor, you want to maximize your own strength, minimizing your weaknesses, and you do that by investing on yourself in your unique journey. A CFA goes exactly in the opposite direction. Basically, you have standard knowledge, and to make well in the market, I believe you need to bet on your edge, which is the opposite of standard knowledge. Because how come you have all these CFAs that turn out to be just average portfolio managers, and the top investors in the world, actually no one has the CFA? How come? It's like you study to become a good professional, and then you end up.
Do you think it's about them thinking outside the box and not having the CFA kind of cloud them?
no. And I, Arnie, I do think that you're a brilliant guy, and you don't know me. I'm currently working on my CFA, but I disagree with you. So people with a CFA, to your point, yeah, they can be portfolio managers, but people with CFA usually are the ones that work for hedge funds, right? And Arnie, what does a hedge fund do, right? A hedge fund's goal is to simply beat the S&P, even if it's by 0.5, basically, like whatever it's by, that's their goal. And to your point, they need this edge because they have to understand how to do that. It is not.
I think that's Arnie's point, which is beating it by 0.5 is not. Like
I can
winning,
guarantee
right?
you that I know 90% of the CFA material without having the certification.
I'll bet.
Yet
I'll take
on
that
paper,
bet. I'll take
like
that bet. Sure.
For a position in the industry, you need to have the CFA nowadays. It's basically one of those certifications. Also, Chris Patel said to work in healthcare, you need to have this. Now, the financial industry is working around this mafia of the CFA. But I would say, if you make one step back, well, it is a mafia.
So you think you can take the CFA tomorrow, not study for it, and pass the first level?
No.
I said 90%. That's what you said, Arnie. You said 90%.
I say I know the knowledge, but there is taking an exam. Taking an exam is different from having the knowledge.
I agree, because I suck at tests, but I'm not the
I mean, the CFA is a test. It's not based on your real understanding on a real case, because otherwise you would have a lot of CFAs that would be investors rather than telling people what to do.
That's true.
What are you talking about? I'm an investor. You're an investor. Eeyore was right.
Yeah, but you're different from typical. You're different from a typical CFA.
What do you mean? The title?
No. You are not the average CFA. You are a very smart guy who does the CFA just to conform to the industry if you want to work in the hedge fund. The reality is that by doing the CFA, you don't really get better. Maybe you learn some things that you probably didn't know it, but it's not that having a CFA makes you a good investor. It is a
I agree.
A paper you need to have to access certain kind of jobs.
I
It's
agree.
like
Meet Kevin got the series thing literally just to like appease.
But it wasn't the CFA. He got
you
a
know.
series. But I agree with that, Arnie. But then that's how the world works. Do you think that having a college degree it makes you smarter or better at the job? No. But what it does do, Arnie, it is a necessary evil. A college degree is a prerequisite to get in the door, because if you don't have prerequisites, then you will be bombarded by people who want to do your job. So
I think you both are agreeing. You both are.
I mean,
essentially
we are
agreeing
agree on the fact that
Yeah.
that is a piece of paper that is extremely valuable to access the industry. What I say is this is absolutely true. I mean, obviously, if you have a CFA, that unlocks you many doors. In the same way, having an MBA, having a degree from a top university is a piece of paper that helps you access the industry. What I say is having a CFA doesn't necessarily makes you a good investor.
Yeah, and I
Actually,
never
there are
said that. Okay.
chances that, especially if you have your own unique approach, as I would say you have, having a CFA, so being forced to digest and interpret that kind of information, which is standard. And if you worked into not a hedge fund, let's say a hedge fund that is very aligned to you, could work very well with you. But if you just go on into the average fund in the industry and you are forced to think like that every day, so standard knowledge again, then you probably as an investor, you would not be better than the digital twin of Gabe, just maximizing his own strength.
Okie dokie. Thank you, Arnie.
That was an
I
exciting
appreciate it.
certificate. That was an exciting debate for those that are interested about CFAs or MBAs.
I get
All right.
triggered with CFAs.
Yeah, we got triggered. You
I
basically, Arnie, this is the
personally
first time I
think
saw Arnie get
CFA
triggered on it.
I personally think a CFA is more valuable than an MBA. And
Probably,
Arnie,
yeah.
I am also in the industry. And my mentor, he said, Gabe, you need to get your CFA if you want to do XYZ, right? And so that's what I'm doing. And yeah, so
So let me ask you, what's your XYZ if you want to share?
yeah, sure, I'll share it. My goal, my number one goal, right? You gotta, aim high and then settle somewhere in the middle. Is to own my own fund. I want it to be like my fund. I don't want to be a portfolio manager or work for a fund, although that's probably realistically where I'm going to be one day. But my ultimate goal is to manage my own fund, right? And we're talking like millions,
Like
upon
10
millions
million
of dollars.
bucks, roundabout, like an average
Yeah,
kind
well,
of
more than that is my goal. I think I can work for JPM and have a $10 million fund all to myself. That's not as hard as you think. What's hard is getting in the door. That is hard. And to Arnie's point, it is a good old boys club in the finance world. Like everyone knows each other, and like Dom said, how the CEOs of oil companies are. That's how it's a small world. People who work for JPM will transfer. It's called like arbitrage to some degree. You're not getting enough at JPM. You go work for Bank of America. You get an instant bump in pay. You work a year or two, and then you go back to JPM, or you go to Wells Fargo, et cetera, et cetera. That's everyone knows each other. It's a very small world. It's
I'm very
very,
close,
very
I would
small.
say.
Yeah.
And that's why having the piece of paper is the prerequisite for actually
Exactly.
entering. Or you
Yeah.
have a Harvard degree, saying a very reputable university, or you have a piece of paper, or you have a connection. Otherwise, you don't really get into the circle.
Yeah.
So yeah.
All right. Well, that's it for our weekly. Got to have a lot of cool discussions, different stuff. It was great to get all your 3 takes on earnings, especially you, Dom, since we haven't heard from you in a bit. Everyone's links are in the descriptions. Please check them out. Arnie is a great Substack, awesome YouTube channel. Gabe does post-market live after shows. He is publicly short this market, and he might end up being right if the market crashes, and
I'm
he will
surprised
make
we
a
didn't
lot
talk
of money.
about the market. But anyway.
Yeah, no, because check out Gabe's channel, because he has a very calculated thesis that's been going a couple months now for why this market's going to crash. And so it's great stuff. And obviously Dom on Twitter, Seeking Alpha, making a ton of content. And that's it.
Thanks, Dom. I learned a lot from
Yeah.
you today.
No problem.
Yeah.
Thanks,
Thank you,
guys.
everyone.
Enjoyed it. Thanks for everyone watching.
We bombarded Dom today.
We bombarded Dom.
Love it.
Dom, you must be happy about NVIDIA though. It's been doing well, right?
What now?
Oh, wait.
You must be happy
So
about NVIDIA.
can we not
Oh, yeah.
close? I got a question
No,
for
no,
Dom
we can't talk about
NVIDIA.
NVIDIA. NVIDIA is a long discussion. We can't. we
No,
gotta-
it'll
we
be
gotta
1
get-
minute. Okay, fine. All right.
We got to get out of here.
All
All
right.
right, guys. Have a good weekend. We'll see you next week.
See you next
night.
week.
Thank you. Bye-bye.